Less than 1% of the Earth's water is available for human use. All the water on Earth, more than 99%, is unusable by humans and many other living things. Only about 0.3% of our fresh water is found in the surface water of lakes, rivers, and swamps. Recently in Bangalore, we observed how lack of sufficient rain had caused the water levels in the Kaveri to drop. This shortage does not just affect drinking water, but also impacts irrigation and industries. Additionally, bore wells in Bengaluru are drying up because of the lack of rain in recent months. Bengaluru is one of the examples of how urbanization is really putting pressure on natural resources. This is also true for many major cities across the globe. We've seen what has happened in Cape Town and water crisis in Africa. Even if the water is available, it's not available in such a state as to be consumed and be thriving on that water. So we are going to be discussing about a company which is engaged in the business of water treatment. VA TECHWABAG Ltd is engaged in the business of water treatment. Its principal activities include design, supply, installation, construction, and operational management of drinking water, wastewater treatment, and also industrial water treatment and desalination plants. The company offers solutions for sewage water treatment, drinking water treatment, industrial water treatment, industrial waste treatment, desalination, and recycling. It has a presence across the entire value chain of water solutions, which includes R&D, marketing, design and technology, engineering, procurement, construction, commissioning, and operations and maintenance. The operation and maintenance is of the prime importance for the management, as I could concur from earnings transcript that I had read. So what they want to do is they want to increase the part of operations and maintenance because that part contains very good margins. So if you would see historically in terms of where the operating profit margin has been, recently the operating profit margin is hovering in the range of 14%. That is primarily due to the change in the type of business that the company is realizing. The company earlier was realizing business where more of EPC was done. So EPC being engineering, procurement, and construction. And because of that, the margins were in the range of 8%. But because the mix has now turned favorably towards operation and maintenance, which has a higher margin of close to 14%, the OPEX has also moved up. The company has 3 R&D centers spread across India and Europe, 125 plus intellectual property rights, and a 100-year track record of serving 6,000 plus municipal and industrial projects across 25 countries. As per the 9-month FY24 investor presentation submitted by VA TECHWABAG, the company has an order book of approximately 12,000 crore with a bid placed for further $2 billion, and the conversion of a bid to a successful order has a strike rate of close to 20%. So taking that into consideration, roughly 3,500 crore additionally could potentially be added to the order book. So that places the order book in excess of 15,000 crores, and that gives it a multiple close to 5 times of the revenue. So the order book to revenue multiple is 5x. The 12,000 crore is divided into 43% for engineering, procurement, and construction share, and the rest for operation and maintenance. And operation and maintenance has a margin of close to 14% on an average. The management wants to keep the book asset light by undertaking less of construction component and more of components which utilizes more of its intellectual property and less of its cash. The order book is heavily skewed towards municipal, where 87% of the order book lies. Earlier, the management was focusing more on rest of the business, but now the action has shifted to India and how. Currently, the company also has 4,400 crore worth of order from Chennai for the desalination of water for the households of Chennai, and VA TECHWABAG holds 70% share of the total desalination projects that are happening within Chennai. Given the high order book and good revenue visibility, the earnings at 19.2 looks reasonable. The market cap of the entire company stands at 6,000 crore. Some of its peers' revenue multiple does look rich, with Praj Industries at a multiple of 33 and Thermax at a multiple of over 100. The retrospective sales growth has been muted with a 5% CAGR growth in sales, whereas the price has grown by a whopping 54% CAGR in the last 3 years. In spite of a good price performance, the valuations still look reasonable with a good revenue visibility. Wabag is responsible for 70% of desalinized water in Chennai and received a huge order to the tune of 4,400 crore from the Chennai Metropolitan Water Supply and Sewerage Board. Some of the other big orders include Uttar Pradesh Jal Nigam Operation and Maintenance Project at 1200 crore, sewage treatment plant in Bangladesh at 650 crore, and effluent treatment plant in Russia at 600 crore. You need to be really careful with the business that you're doing in Russia because you don't want to cross the line with Uncle Sam. The company has also worked with global giants like Aramco and Reliance Industries and has immense expertise with also working on oil-based engineering. In terms of the emerging areas, future opportunities lie in green hydrogen and semiconductors. Now you may ask, what is the correlation with wastewater treatment with green hydrogen and semiconductors? But the production of green hydrogen and semiconductors require ultra pure water. VA TECHWABAG has already done a plant for the semiconductor company, and green hydrogen is really produced by the electrolysis of water, as a fuel is not economically viable. How solar wasn't viable some years back, but green hydrogen is essential in reducing greenhouse gases, and many countries globally are continuously refining the process. The order book is concentrated with over 30% comprising of Chennai desalination project. The order book has primarily been with municipalities, and there has been an instance whereas at September 2022, company has receivables pending to the tune of 200 crores for power generation company in Andhra Pradesh, because of which its ROE and ROC numbers are a little skewed and does not look as attractive as some of its competitors. Do let me know in the comments below what you think about this company and any key points I might have missed in the analysis. Thank you so much and have a lovely day ahead.